Welcome back to Green Disruptors, Scaling the Future, where we dive into the innovations and entrepreneurs reshaping sustainability. I'm your host, Megan Kjar, and today I'm thrilled to welcome Andrew Gilmour, founder and CEO of Laconic. Andrew's on a mission to transform carbon credits from a charitable afterthought into a fully tradable financial asset. In this episode, we'll explore how data management, market infrastructure, and strategic government partnerships are unlocking the true value of carbon and creating a virtuous circle that benefits both investors and the planet. Let's get started. All right, welcome back to another episode of Green Disruptors, Scaling the Future. This podcast is brought to you by Mountaintop Social Marketing, and we help green tech companies scale. And I am extra excited today for our guest. We have Andrew Gilmour with us today, who is the founder and CEO of Laconic, and they are doing some really important things, and he is going to tell us all about them. Hi, Andrew.
Megan, how are you today?
I am getting over a head cold, so I hope I don't sound weird.
No, you sound great.
Good. Well, yeah, tell us a little bit about you and then how you founded Laconic and how that all started.
Yeah, so my story is probably not that interesting, but I'm a serial entrepreneur. So Laconic is actually the fourth company that I founded from scratch and grown to, into something hopefully meaningful. And what drove me to start Laconic was seeing carbon being talked about as kind of the savior of humanity, the trading of carbon to facilitate emissions reductions, to offset climate change and the like, and with Kyoto and the Paris Agreement and the like. And I'm not an environmentalist. I have a philosophy degree. But
do you?
But the science, a philosophy of science, actually, for one of the technical. So I always had, a scientific and a mathematical bent. And, about one day in 2021, I just had this thought of people have been saying that we're going to trade carbon and it's going to mobilize trillions of dollars of finance and we're going to decarbonize the world and it's going to be great. And none of that's actually happening. For 20 years, we're trying to build a market and no market has developed. And that was kind of an interesting thought experiment for me because, a lot of people say, well, there's no demand. There's a lot of demand for carbon and for exposure to carbon. Not just for offsetting, by the way, not just from an environmental point of view, but there's a lot of demand for carbon in a financialized form as a risk management tool. Right? If you're an insurer and you're writing catastrophe insurance policies against fire risk or tornado risk or hurricane risk and the like, right, the concentration of carbon in the atmosphere is positively correlated with the incidence of those risks, right? So whether they happen more often, or when they do happen, they tend to be more powerful, more destructive.
Yeah.
And so you have, there's a lot of interesting things you can do in a financial sense with carbon that is not the traditional, I just need to offset my emissions or I'm trying to pay people to sequester carbon, out from the atmosphere. That's not to say that that's a bad thing, but for 25 years, most people have said that's what you can do with a carbon. Well, it turns out you can do a lot more with carbon if you package it properly. And so that was, kind of an interesting challenge for me. And really that started what became Laconic, which is really a data management business. Because when we talk about trading carbon, Megan, it's not like oil or orange juice or pork bellies or a commodity, although people often think of it as a commodity. And that's because if the carbon has been removed from the atmosphere, it's in the ground. Now, whether a machine sucked it out of the air, direct air capture and all of the new high-tech things coming out of Silicon Valley and the like, or whether a tree sucked the carbon out of the atmosphere or seagrass or the like, it's been removed and it's sitting somewhere on the earth. And so when we talk about trading carbon, what are we really talking about? We can't actually exchange the carbon for cash. So what we're really talking about is a promise. Somebody makes a promise to keep the carbon in the land. in exchange for money. And that's just data, right? In a financial lexicon, that would be a swap. Well, it wouldn't technically be a swap, but it's very much similar to a swap. For all of our banker friends listening to the podcast, I get it. It's not technically a swap, but uh,
I mean, is it
it's a
comparable to
different transaction.
like money in a bank account? It's like it represents, well, no, because it physically does exist. So it's not the same, but
Well, it physically doesn't exist, but you could say that reserves exist somewhere, right? So it's information. It's information about the state of the earth, about this particular spot
yeah.
on the earth, what's happening there, right? And and does it continue to exist, right? And in carbon, we talk about permanence. I can plant a tree and suck carbon out of the atmosphere today and sell a carbon credit. But if I cut the tree down tomorrow, that carbon credit actually doesn't have any value anymore, right? It has to be permanently. And by convention at the United Nations, permanence is generally 30 to 35 years
Mm.
from date of issuance. So it's not permanent, but for all intents and purposes, it's a long-term thing. And so managing data is how you manage money flows with carbon. And so if you want money to move by people trading carbon, you have to be able to manage data about the carbon in a trustworthy way. And really, before Laconic, there were almost no organizations that were focusing on the market plumbing of moving the data around, and how do I make sure it's auditable, and how do I make sure it's trustworthy, and the like. A tremendous amount of research and effort and money flowed into what we call MRV, measuring the carbon. Super important. But once you've measured it, it doesn't really matter if your claim is 95 or 99% accurate if your data is 5 years old, because people want to know, does it exist today when I buy it, right? It doesn't really matter if your science is 99% accurate if you collected your data by writing down information on a clipboard with a pen in a forest, and
Which
then
is
somebody
laughable.
type, but it happens. And in fact,
Yeah.
most are, and then it gets typed into an Excel spreadsheet. And so every time this data gets touched by human hands, there's an opportunity. Well, there's two opportunities. There's opportunity for what we call fat fingering, right? A data entry error. I hit the
Yeah.
wrong button, or fraudulent misrepresentation in the worst case, right? And
Yeah.
certainly that has happened with the Guardian articles and other things that you see, kind of giving the industry a bad name. It's kind of like, why can't we have nice things, right? This is really a small portion of the industry that is looking to make a quick buck or a profit or the like, but
Yeah.
it's sullying kind of the entire industry. And so we need a real market. And a real market is like the stock market or a
Mm-hmm.
bond market, right? We need to be able to buy carbon like we buy a share of Google. Get your app, get on the phone, you say, buy, right? And your order fills in less than a second. If we could do that with carbon, then we'd have a truly global market. If we had a global market, a lot more money would flow. And I'll give you an idea of how much the delta
Yeah.
is. In order to stay on a 2-degree glide slope to net zero by 2050, we need about $1 trillion US a year of new carbon instruments to be issued every year for the next 25 years. Those $25 trillion. Last year, in the voluntary carbon markets, there were
Still in the
$3.1
billions.
billion.
Yeah.
3.1, 0.08% of what was
That's
required.
rough.
Because buying carbon's like buying a house. Now, it's bespoke. It takes lawyers across a conference room table. Every deal is different. There's no standardization. And so from a financial point of view, it's not really a market.
Mm-mm.
It's more like a charity industry. So with
So
this
who is
really,
buying it right now? I'm just curious.
you really have two major buyer groups right now. You have the large tech companies they are the bulk of the buying. So Google,
And they're doing it to
Facebook,
offset.
they're doing it to offset, and they're doing it to virtue signal because they have the cash. So they
Yeah.
can afford to. Because
Mm-hmm.
see, a carbon credit isn't a legally recognized instrument, a thing. It's not a legally recognized thing. That's a technical term in the United States. So you can't really own it, right? And so it doesn't really matter to Microsoft because they're not really interested in making a profit off the transaction. They're interested in
The virtue signaling.
for in the virtue signaling
Yeah, that makes
for
sense.
the most part. So you have that, and then you have a retail market, which is really fraudulent, but it makes people feel good. And these are like the apps you can download from the App Store. It's like put in your credit card number and pick a project. Oh, I want to save trees in Bali or the like, and then they bill you $20 a month, right? And
And you feel so good about yourself for 20
and you
bucks a
have
month,
but you have no idea if you've bought
but who
something
knows?
real.
Right.
Who knows, right? And the markups are huge. The people marketing those apps are making $19 a month off of you, right? I mean,
Sad.
it's big business, but it's really small volume, right? So not a lot of people are buying. Who wants to buy? The 80% of the S&P 500 that have a published net zero target. These are publicly traded companies that have said we're trying to decarbonize our enterprise. And the thing about carbon credits and offsets is that it's a disappearing thing. If we do our job right as humanity, then when we achieve net zero, well, when we achieve zero zero, I should say, because the net in net zero, most people don't want to talk about. That's the point of the offset, is a realization, a realpolitik realization that it's going to take decades to decarbonize the global economy. Nobody wants to go back to the Flintstones and just flip the switch off and say, no cars, no electricity, no
Yeah,
internet,
that's not happening.
any of those. And so there's this process over time. And so, yes, in 2050, 2060, 2070, platforms like Laconics won't be required anymore. Okay, great. What's our goal? Our goal is to help us get there. And that's good business for us over the next 25 years or 30 years. It's not a
Yeah.
100-year plan for us. And if we do our job right, we will make ourselves irrelevant over time.
Irrelevant. Yeah.
And that's really our goal as a company. So corporations want to buy, governments want to buy. Right? If you're a government, you sign the Paris Agreement, you pledge to have your economy be net zero as a whole. And there are governments like Singapore, for example, that will never be zero zero. They have a structural imbalance. So in Singapore's case, they've got 6-7 million people, very, very small land area.
Yeah.
They have the largest refinery in Asia inside their territorial borders and the first or second largest transshipping port in Asia.
So without
And
offsets, they'll never get there.
their annual deficit is about 50 million tons,
Yikes.
right, a year, just for the government of Singapore. So the government of Singapore buys carbon at the government level to honor its treaty commitments, right? Now, they don't buy 50 million tons a year because there isn't 50 million tons a year to buy in the voluntary
Crazy.
markets. And that's not because there isn't 50 million tons of supply. It's because you can't get 50 million tons packaged in a way that's transactable across international borders. So these are regulatory problems. These are
Hmm.
legal normalization problems. These are market plumbing and infrastructure problems, not a failure of supply or a failure of demand. And I think that's what most people don't understand about the carbon market when they say it's broken. That's normally shorthand for I'm pretty sure nobody wants to buy this stuff, or I'm pretty sure none of it really exists.
Which
Neither
both
of
are not
those
true.
things are not true, right? What the market failure is truly a market function failure. It doesn't exist in the middle. And so that's the
Which in my
bridge we
mind
set
might
out
be
to build.
the easiest of those three problems to solve. I mean, not easy, but like that's a solvable problem.
It is a solved problem. We solved it at Laconic, but you know, it it requires capital, a fairly sizable amount of capital. So this was not a problem that an NGO or a group could solve because they're too thinly capitalized
Hmm.
and grants come with too many strings attached, right?
Yeah.
So, you've got to build a data aggregation platform. Right? You've got to enable, and then you've got to enable the real keepers of the carbon to transact at scale. And that means building a tool that can monetize an entire country's store of carbon additionality activity, right? And by additionality in particular, I mean reductions and removals, Paris compliant emissions reduction units, not avoidance. Uh, the technical problems with trying to monetize avoidance, most of them aren't real. And so because of that, you can't really make a market in avoidance. Now, avoidance credits are great if you want to greenwash because they're super cheap and let you say, hey, we offset 10 million tons of emissions for $10 million. We paid $1 a piece, whereas the clearing price for a Paris compliant removal ITMO might be $25. Well,
Mm.
if you're a corporation,
Are you going to spend
you
one or
say a ton is
25?
a ton is a ton, right? And so
Yeah,
uh, now progress is being made there because people are realizing that avoidance is,
it's
for all
not
intents
helping.
and purposes, well, not only is it not helping, but it's not netted, right? So the beauty of the Paris Agreement is that every country has an emissions ledger, right? Carbon flows in and carbon flows out,
Yeah.
and those transactions are netted across all of the different countries. The voluntary carbon market is not netted. There's a theoretically infinite supply. So if you buy a carbon credit that's not Paris Agreement compliant, that's not an ITMO, right? Which for your listeners, an ITMO is an internationally transferred mitigation obligation, which is UN speak for a ton of CO2e that was created by a government,
Okay. Thanks for
right?
that.
So uh, if you're buying voluntary credits, how do you know you're buying something that's unique? How do you know that it hasn't been sold 3 or 4 times? How do you know that it is truly additional inside the scope of the Paris Agreement? You don't know any of those things, and you can't find out any of those things because nobody is keeping track of the origination of those units, right? They're being created by private developers. They're being managed by nonprofit registries like Vera and Gold Standard. Uh, Interestingly enough, if you register your project with Vera to get certified, because people say, I need certified credits, in the document you sign to register your project, you declaim your property interest in the carbon, which you then turn around and sell after Vera has certified it, which just makes lawyers' heads explode because you just told Vera it wasn't something you could sell. It wasn't property. And then you turned around and said to some other third party, buy this thing from me and give me money. Right? I mean, that's kind of the level of fundamental problems
Yeah.
that were in the marketplace. Um, but you can solve all of those things. So if you can aggregate all that data together, you can go to a government, you can say, why don't you monetize all of your carbon as a program, right, at the government's level? And this solved a bunch of problems. One, the government is the signatory of the Paris Agreement, right? And the whole world is in the Paris Agreement except for what the United States, uh, Iran, uh, I even think Venezuela's in it. There's one other, it's 196 countries. It's the whole world other than us. Um, so if you're in the agreement, you can go to a government like we're working with the Bolivian government right now, and we said, okay, you have forestry assets. In fact, they have 108 million hectares of forestry assets, and you have unfunded laws that you need finance. Right? So you have conditional ambition in the language of the Paris Agreement. You've promised to reduce your emissions as a country, and you've made the promise, and you've told the world about your promise, but you don't have any money to implement the programs necessary to create that. And in Bolivia's case, this is kind of policy additionality. This isn't your typical kind of red plus or afforestation, reforestation, we're planting trees. They actually passed a law to make slash and burn cutting of the rainforest illegal for the first time
Mm-hmm.
in the history of the
I
country.
heard that.
And
Yeah.
they need enforcement money to put forestry rangers and police into the forest to enforce the law,
Crazy.
right?
Yeah.
So that
Guess that
they
makes
can
sense.
reduce their deforestation rate, and they don't have the economic resources to do that. So that's part of what we're creating through our monetization program for them. Is so they have this ambition. It's measurable. You gather all the data together. We built a platform to do that. That's called SIDAR, that can operate at national scale. It costs a lot of money, right? We were multiple rounds of fundraising
Yeah.
and the like. So I mean, we're talking multiple tens of millions of dollars, right? This is not 500 grand or $1 million or the like. And we have this platform. It's running. It's live. Runs in the cloud on wind energy, fully offset,
Nice.
and they issue a security. like a bond, like a government bond. And so when I say a security, I mean a legal security, like a stock or a bond. And there are rules for that, right? So this is actually issued pursuant to SEC rules. There's regulations. Lawyers opine as to the validity of all of the documents and the like. And because of that, it's an asset. It's not a liability. So now when you buy Bolivian carbon, you put it on your balance sheet as an asset, not as a liability. If you buy voluntary carbon credits, you put it on your balance sheet as a liability. That's the actual Financial Accounting Standards Board, FASB, which is the international regulatory body for the accounting profession globally. That's
Very
their
cool.
actual rule for voluntary carbon
Yeah.
credit. Don't have to take my word for it. You can go nerd out, look it up on their website. It's a liability. Well, so no one wants to buy this stuff, right? Why do I want to pay twice? Why do I pay
Right.
$20 for a carbon credit and I have to put a $20 liability on my balance sheet?
Yeah.
That's why corporations don't buy this stuff. Again, it's a regulatory failure. It's not a scientific failure. It's not our ability to quantify the carbon. Um, and so you build all that together, build all up together. And now as a security, anybody can buy and sell it. I can sell it to you, Megan. You can sell it to Facebook.
So it's now
Facebook can
functioning
sell
more
it
like a
on to
bond
Microsoft.
would, and you can list it as an investment that has value.
Exactly. And so it has financial value and environmental value at the same time. So it still can be used as an offset at any time. You don't have to ask permission. Yeah, and at that point, you convert the financial value to the environmental value. That's how it works, right? So this is a
Hmm.
wholly new thing in environmental
Crazy.
finance, right? So it didn't
Yeah.
exist before. So you can trade it now. And so now you can say, well, I don't know how many carbon offsets I'm going to need this year. I may need 500,000. I may need 1 million. Well, you can now buy 1 million. And if you need less, you can sell off your excess to somebody else who needs it. And maybe the price has gone up and maybe you make
And you
money
just made a little profit.
and you
Yeah.
just made a little bit of profit, right? Or maybe the price has gone down and you say, oh, you know what? I'll just hold these for next year. That's not a problem. And now we have a functioning market. We have a bid and an ask. And you get price quotes, you get price discovery. So without a market, no one knows what carbon is worth because there's no transactions to view, right? We know what the price of Google is down to the millisecond because so many shares change hands throughout the day. We know what the price of each of those transactions is. The exchange gathers that data for us. And so it's very, very clear. In carbon, without enough liquidity, without enough transaction volume in the market, you can't have that price discovery. So what we did is we built a tool that took the carbon using UN science, not our own science. It's totally auditable to a third party at will because it's a digital platform. And we package it as a security. So now you can buy carbon by calling your broker and saying, I want to buy Bolivia's 2025 AFLU carbon, or I want to buy Cayman Islands seagrass 2026. Okay? And you take delivery of it. Your money flows, it clears centrally like a stock transaction clears, and your broker holds custody of that asset for you, just like they hold. No one gets stock certificates anymore, right? I mean,
Yeah.
you just take your
That's true.
broker's word for it that they're holding it on your behalf. So it's the same thing. So now we've plugged carbon into the global capital markets. Now we can make a market. We don't need treaties between countries to enable us to trade carbon. I gave a talk in Singapore last August. There's a video of it, I think, on our YouTube channel at the Carbon Markets Institute conference. And it was entitled Carbon Isn't Special. Right? And people didn't like the title, and it was kind of purposefully
Yeah, I love it.
provocative. But
Yeah.
the point of it is that for too long, people have said carbon is special. We need to build a unique market infrastructure for it. And our whole point at Laconic is carbon isn't special.
No,
Carbon is
you
just
don't.
information.
Yeah.
So what you need to do is package the information in a way that the existing infrastructure, right, can be used, which is battle hardened. I had a meeting with somebody that said, well, I want to build a clearer for carbon. And clearing is just a fancy word for an intermediary where buyers and sellers put collateral into the
Okay.
pool
Yeah.
so that the clearer makes sure that the deal actually happens. And that's what allows people who don't know one another to trade large amounts of money, right? So if I want to buy $100 million of carbon from you, Megan, we go, okay, you say you're good for it, but I really need to be sure. Well, the clearer's job is the clearer takes the security from our side and the cash from your side, matches them together and doesn't release them. Right? This is big business, but it requires a huge balance sheet and ironclad technology. Should you hundreds of thousands, millions, tens of millions of transactions a day. So we're going to build a carbon clearer. I said, why? Right? In America, we have this thing called the Depository Trust and Clearing Corporation, DTCC. In Europe, they have one for fixed income called Euroclear. And these two clearing houses, which are owned by banks, by the way, consortiums of financial industry entities, clear trillions of dollars of transactions a week
Crazy. A
in,
week.
week out. And it works. I said, why not?
Yeah.
It's a solved problem. Don't
Yeah.
try to
Like
reinvent the
don't add an
wheel. All
extra
right.
step. Yeah.
Don't add an extra step. So that's what, that it's a litany of problems all together. And it's easy to say, well, we can solve this one, or we can solve this one, or we can solve this one. But really, either you can make a market or you can't. And so what we spent the last 4 years doing is solving all of those little problems so that there's a full path to marketability. And now you've got the ability to transact at scale. We're in the market right now, actually building a book for $1.2 billion of carbon securities backed by Bolivian forest ambition. That's the largest single carbon transaction ever. Right? It's scheduled to
Wow.
close in 45 days' time. Largest single trade outside of compliance markets, I should say, because the European cap and trade system has existed for a long time. It works really well in Europe. Problem is the world is bigger than Europe, and those units aren't fungible. You can't take them out of that regulatory environment. So what we built was a truly global instrument for carbon.
So how does that work as far as your business model goes? Like how does Laconic make money from this system? And like I'm sure you had to pay back a lot of the investments that you gathered in the beginning and
Yeah, so we make money by originating the instrument into the marketplace, right? So our customers are governments, and we package the data, build the security, get the legal opinions, work with the investment banks, kind of manage that entire process. And our IP is embedded in that process. And then when it's sold out to investors in the marketplace, we earn a percentage
okay.
of the money that's realized for the transaction. So we're 100% aligned. We don't take any money up front from any of our customers. If we don't make them any money, then we don't deserve to make any money ourselves. So,
Good
you kind of
strategy.
you got to walk the walk.
So how did you initially how do you approach a government as a prospective client, I guess?
Yeah, that's a good story. So uh, you asked, your first question was tell us a little bit about yourself. So I guess how do you approach a government? Before Laconic, I had a development company. I was a large scale infrastructure development. So I developed criminal justice facilities, actually.
Oh wow.
Not a very sexy business, but one that's necessary, prisons and
Yeah.
jails, courthouses, for governments, and financed them as the primary developer. So not as the construction company, not as the general contractor, but as the project developer as a whole. So that was our.
Okay. Yeah.
And so developed my team and I just developed relationships all over the world over a long period of time. Before that, I did own a specialty contractor, which was my first business here in the United States, and did business with 41 of the 50 states and the federal government and the like. So I have a long
So
experience in
you know
government
people.
contracting. So I know people, and we've, in past lives, we did successful work for them. So you have a Rolodex, you can call people up. And then you have to have a knowledge of how the system works. Who do we have to talk to? How do we navigate? And how do we navigate outside of the United States? Because really, how do we navigate emerging markets economies? Right? Because from a macro sense, the global carbon market is a global north to global south trade. Right? The global north of the developed world is long cash and short carbon. And the global south, they're not all in the south, but the emerging markets economies actually are long carbon and they're short cash to drive additionality and other programs into sustainable development programs. And
So
so,
there's a real opportunity for both those sides to help each other out.
exactly. So facilitating that trade requires originating a carbon security off additionality activities in global South governments, right? So uh, Latin and South America, Sub-Saharan Africa, Southeast Asia, um, et cetera, for the most part. And so you learn over time to navigate those governments and um, kind of let them know that there's something new, because this is not something you can just reply to a bid. They don't know that it exists. We've created
Yeah,
something
so
that's
there's a lot of
totally new.
education up front.
Tremendous amount of education. I mean, and that's actually what led us to start our YouTube channel was
Mm, that was going
education.
to be my next question. What are you doing
Let
about that?
let's talk about that. So I spend probably 40% of my time on global education, whether that's specialty, highly technical talks to Structured Finance Association or the likes of talking to uh, Wall Street practitioners about kind of really technical elements of what makes it a security and how you could trade it and the like, or talking to environmentalists or chief sustainability officers about how this could fit into their portfolio and how it can be used as a risk transfer instrument. And then from a YouTube point of view, those are really tendered at a general audience, right? There's something new. There's a new way of looking at this, and there's a new market driven, which is very important to us. Is that at Laconic is that this is a voluntary transaction that we're facilitating. We're not telling anybody. We're not telling anybody that they have to buy something, right? Why do people buy stocks and bonds? Not because they have to, because they want to. Right now, there's an expectation of economic gain and the like, and great. That's what we wanted to bring into it. Uh, and I've had people, aggressively, tell me at venues, on radio shows and the like, hey, I think carbon is for, it's all fake. It's all fake news. Carbon credits are for vegans. I'm like, I've heard everything, right? I mean,
You should put
um,
that on a t-shirt.
and that's, yeah. And,
You shouldn't.
you know, and they said, well, and I kind of smile when they say that. And they go, well, hey, I'd have thought I'd have gotten under your skin with that. You built this company around this. I said, no, not at all. I said, well, what do you mean? I said, well, so you believe that climate change is not real? And fine, you have that point of view. They said, yes. I said, well, if you're right, carbon should be worth zero. And they said, yes. I go, well, okay. It's not worth zero. So why don't you short it? You can express a point of view about carbon. And that doesn't have to be the environmentalist point of view. In fact, the market needs people to take both sides of the trade. So
Hmm.
if you believe you have the secret sauce, and I'm not going to opine one way or the other,
Not going to
right?
waste your energy on that.
We've created an instrument that allows you to express a point of view financially about carbon, right? And all of the things that it's correlated to or not correlated to. And so, if you think people's models are wrong, you can take that side of the bet, right? And so, and they went, huh, you can do that now? And I said, well, you can now in the securities format, because without a security, you can't go short. Because in order to make a short trade, you have to borrow the security to bet against its price going down. So it's kind of a technical thing, the way the short markets work. Well, remember what I said before is voluntary carbon credits aren't property. So you can't borrow it. So legally, you can't short the price. It's what we call a long only market. And the environmentalists love that. It's pure play. Saving the earth should have value, right? It's none of this intrinsic value argument. Okay, there's some intrinsic value to the carbon, but transactability and enforceability of contract and covenant also have value. And so if you layer on those features of carbon, you add to the price. And so carbon in a securitized format is worth more money. 1 ton of carbon in a securitized format is worth more money than 1 ton of carbon in a carbon credit format, because you can do more things with it. It has
Yeah,
more
that
intrinsic, it
totally
has more
makes
value.
sense.
And so you can play both sides. And they went, huh, well, I never thought of it that way. I said, right. My goal here is in talking to you is to show you that there's a way of expressing a point of view. I'm not here to lecture you about your climate goals. I'm not a climate consultant. I'm an environmental financier. right? So we've created an instrument that allowed you to express a point of view. And if your point of view is that should be worth less tomorrow than it is today, you can act on that inside the capital markets, just like people short stocks all the time,
Yeah.
right? Um, and so
So
that's kind of where
interesting.
we want to be, right? We want to
Yeah.
make a true market, a true capital market. And that's that infrastructure that we've built. So we're super excited about that because it gives the supply. I mean, for the first time, you can buy $100 million of carbon in a single slug, right? And if you look at Amazon, for example, Amazon's net emissions position last year or the year before from their last sustainability report. I don't know if there's a 1 year lag or if it was current year lag. So 2023 or 2024 was about 70 million tons, right? I mean, think of all the delivery vans, Prime bringing us the stuff, right? 70 million tons. Well, okay, so let's assume $10 a ton, right? So they need that's $700 million of carbon in a year for Amazon,
In a year.
right? In a year. And they have not been able to purchase at that level of scale. And so that's why there's a lot of talk about what we're going to do in the future. And you hear a lot about, kind of makes me want to vomit in the back of my throat whenever I hear people say, well, the carbon market needs is more integrity. I said, it doesn't need more integrity. It needs to be a market. It needs to be a real market. And real markets, by the way, demand integrity, right?
Yeah.
if you issue a
True.
security, you rep and warrant that it's true, right?
Mm-hmm.
You're liable for securities fraud, which is a jailable offense in the United States. If you issue a carbon security on on false representations, you can say whatever you want with with voluntary carbon because it's like buying and selling baseball cards. It's not a regulated industry.
Mm-hmm.
So we said, no, we want to bring it into a regulated context because that's what will drive big dollar purchases. Nobody's going to buy $100 million of carbon in baseball card format.
Yeah, exactly. That would be
They're not.
insane.
They'd sooner light it on fire on the middle of the Las Vegas Strip. I mean, at least they'd get YouTube views out of it, right? I
Right.
mean, they're just
Mm-hmm.
not going to do that. And so you have to build, you have to leverage the infrastructure we have. And that's some people might think that that's boring, but that's the exciting part of the business because when you put all the puzzle pieces together, you've built this bridge. And for so long, it's kind of like the sellers of carbon were on the south rim of the Grand Canyon, and the buyers of carbon were on the north rim of the Grand Canyon, and they're shouting across the canyon at one another, but there's no bridge. They
Yeah.
can't move.
Good
And when you
analogy.
build that bridge, and now people can transact, I mean, that's what gets me out of bed every morning. So, hey, we did
Yeah.
something. We built something of enduring value. And that enduring value is that it lets a large swath of other people do something they've wanted to do for a very long period of time.
Well, I heard you say something about this in some things I've read, but it's like you need to make it more profitable to solve a problem than it is to perpetuate it. And I think this whole model, it doesn't need to be related to policy or to, cultural mood or environmental morality. It's just this just makes sense.
It's just tradable. And look, if you
Yeah.
give traders something to trade, they will trade it to make money. They will not trade it to save the whales. They will not trade it to save humanity. They will trade it to make money because that's what they're good at doing. And so again, they're kind of harnessing that enlightened self-interest. You
And
give
we
them
can
a
use
product.
that for the positive. Like that doesn't need to be an evil thing.
Well, right, because in order to trade, you have to build an inventory, right? So if you're going to
Hmm.
make a profit, like a hedge fund, let's say you establish a position in an instrument, and then you're going to arbitrage that price movement one way or the other, and you're going to make a profit. But in order to create that arbitrage, you have to buy the instrument first. Well, when you buy the instrument, a government or a project developer who's doing good things for the planet got paid, right? That
Yeah.
first transaction flows money into sustainable development. right? And that's the thing that most people miss when they think about financialization of the environment is they think about all these hedge fund guys in their head making money and going ha 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 ha, ha, and they're like, they're like the monopoly guy. And
Yeah.
but in order for that to happen, they don't think about the first transaction, which is that somebody had to buy the instrument from the person that did good for humanity
Yeah.
in the first place.
I love looking at it that way. Yeah.
Right. And so let these guys make money, because the more money they make, the more they're going to want to buy from the people that are doing good things.
Mm-hmm.
And it's a virtuous circle.
Virtuous
Right. And you have to
circle.
think about it, it's not a zero sum game. It's a chain of value. If you enable a certain group of entities to make money, and you're supplying them with the raw material they're using to make money, they're going to buy as much of that raw material as they can. And in this case, it's a carbon security. And that makes dollars flow, because carbon trades in US dollars for the most part. And when you think about that, what does a dollar buy in Bolivia? A lot.
A lot. Yeah. Ooh,
A
that's a
lot.
good
Right?
point.
And so from the Bolivian government's point of view, they're going to receive dollars. They get an instant force multiplier when they push those funds into their economy. And they can do so much at a price that is impossible for us to achieve here in the United States or in Europe
Yeah.
or in Canada or the like. And so it is a massive force multiplier. And by the way, they didn't borrow this money, Megan.
Yeah.
If
It's
they
profit.
succeed in creating that additionality, it's permanent. In global finance, like we say FDI, foreign direct investment. This is permanent foreign direct investment, money that grows an economy that never has to be paid back. So our mandate with the Bolivian government is $5 billion. When we place $5 billion of those securities, we will grow the Bolivian economy by 2.75%.
Wow.
Right?
That's,
That's
I
a
see
needle
why you're
mover.
excited to get out of bed in the morning. That's amazing.
That's a needle mover. Yeah.
Yeah. Wow. I mean, I'm going to speak more broadly, but the fact that you can improve a country's economy whilst, fighting climate change, everything is getting better. That's just such a reason to, there's no need to speak in terms of doomsday about any of this. Like, it's all a giant opportunity to make the world better. And there's a lot of people doing so many things that we don't see that are doing just that. And it's awesome.
Yep. Exactly. Exactly. And our tool is the conduit for all of those other people doing great things to receive the funds they
Yeah.
need to realize their visions.
So cool, man. I think it's a good ending note because you got me all fired up. That's so cool.
All right, good.
This has been, I feel like the fact that you helped me understand this means that you're a good communicator, because that's some complicated stuff, but thank you. I hope everyone in the audience will have learned something, and it's just a new way of thinking about it. And to me now, it totally makes more sense. But thank you for your time today. And thanks for this work that you've been doing. This is incredibly impactful.
Great. I appreciate it, Megan. Thanks for your time today.
Okay. Thank you. Talk to you later.
Bye.
Andrew, thank you so much for unpacking the complexities of carbon as a security and sharing how Laconic is building the market infrastructure we so desperately need. If you enjoyed this conversation, please subscribe, rate, and leave us a review wherever you get your podcasts. Until next time, keep disrupting for good.